I think is the situation and the market is matured enough to at least to the brokers that they now need to start learning. They now need to start understanding the numbers. You cannot just be pushy. Hi guys, in conversation with us today is Rohit Lohia.
Hi, this is Rohit. Thank you, Rahul.
He's been in Dubai since 2000, so he's lived most of his life here in real estate since 2020, and he's traveled almost half of the world selling Dubai. How do you choose what is right for me, or how do you choose what is right for one individual? Because everybody may have a different goal.
So, if I tell you as a realtor, what I have seen normally in the market is that most of the times, most of the realtors will have a favorite project, and they try to fix it on their clients. I would rather look at what is the comfort zone of the client.
Mm.
The idea is not to sell, but idea is to invest right. So understanding his cash flow is the most important thing I'll do in my exercise with the client. This is the first thing and the only thing I want to understand from my client. Where's your comfort zone? Don't get stuck into a property, even if it is good. But if you cannot afford to pay for it for the next 2 years during the payment plans, it's not for you. As simple as that. Go for something smaller, which is more affordable for you. And the most important thing that, as you said, that you give my own example, uh, I always tell my clients that investing in property is income generation, and over a period of time, it's wealth creation.
True.
We start looking at it as starting point itself as wealth creation rather than income generation. So I recommend all my clients that even if we are talking about wealth creation in a shorter period of time, plan your cash flow where if you have to carry on with the property for a longer period of time, at least it feeds you with the regular EMI consumption, that it pays for itself. That's the first checkbox I would ask my clients to tick, that can it pay for itself after you have paid for the down payments. So let's say if you have paid 30%, 40%, even that is pretty high. So if let's say if you have a payment plan of 30/70, which lot thankfully after the regional situations, many developers have started coming up with 30/70,
True.
40/60. So can the property pay for itself after you have paid for your down
Mm.
payments? That's the first and the only question I think the investor should ask.
But then, how do you handle this FOMO? A lot of brokers in the market, a lot of consultants who look at buying, selling as a one time relationship. They don't believe in creating a right wealth strategy or investment strategy. A lot of times, investors also go with the flow or they get into the FOMO, last unit, you will miss the opportunity. How do you handle such situations?
So yeah, so see, it's something which is created by people like us, creating that FOMO. I've not been a very big fan of that thing at all. Even at times, even when the unit is actually the last unit, I never tell my client this is the last unit. So let him think, let him absorb the whole thing. If he's really convinced about the project and he's just like sitting on the edge where he's almost decided by 95%, 99%, then that last thing that, sir, this is the last unit and better let's decide. Otherwise, tomorrow morning we'll look at something else. So, but yeah, especially because I travel a lot, those people there, they cannot understand how Dubai works. Yes, it is true that a lot of times it is indeed the last unit, but not everybody understands that, and I do not try to make them understand that this is indeed the last unit and you must buy and you must hasten your decisions because it is the last unit.
Looks like you're a believer, like if it is for you, it will come for
Yes, it is one way of looking at it,
you.
but at the same time, I feel that the client should buy. I should not be selling. My job is to facilitate him to reach to that decision rather than selecting something for him and then he should agree with me. That's not something which I like to do.
Mm. What I understand is your advice is be an advisor, don't be a broker or a sales agent who is only looking to push to sell.
Exactly. This is the biggest difference where uh, the agent and the consultant differ from each other.
Right.
So, as you said, that since I'm living in Dubai for 25 years, I've realized that this market needs consultants, not
True.
agents.
Very true. And I think if not more, at least 90% of the market is only agents. Probably only 10% who even understands what ROI or IRR is.
And especially now after the regional situation, you becoming a consultant has become even more important. And for your clients or our clients, for them to have a consultant around him is the most important thing right now a client will have for himself.
Very true. I think the clients also will start understanding the value of a consultant versus a value of a broker. I totally agree with you.
Absolutely. Is it still a good time to buy? Is it still a good time to look at this market? The overall perception, how do you feel about it?
So what I feel, Rohit, the problem is that every investor who's invested in Dubai thinks that real estate, you can double your money in a year, in 6 months, or you'll make some quick returns and exit. Real estate anywhere in the world doesn't work that way. It's
True.
a long-term strategy. When you are entering market, you need to enter with the right leverage options. You cannot have $1 million and commit to buy properties of 20 million dirhams. Okay, you have $1 million in pocket, you are committing to buy 2 million dirhams, makes sense. And also Dubai real estate, if you look over a long-term scenario, you've always made money. You've yourself been an investor since 2007, 2008. You've seen market going up and down. You bought at a high, but you didn't panic. You didn't sell when it was low. And eventually in 7, 8 years, your property was free. You've
True.
made good rental returns. And today, 15, 18 years after you bought your first house, you own multiple properties. And you see over years, it has given you the right return. Today, with first properties returns, you are sitting with another two properties. So if your vision is right, if you are not over leveraging yourself, and if you're looking at a 5, 10, 15 year timeline, then there is no question of good or bad time. It is about right project, right product, and just being patient enough and being in the market. So if you ask me, was yesterday good? Yes. Is today good? Yes. Will tomorrow be good? Yes. Idea is you need to be in the market for a long time. This is not equity, this is not commodities, this is real estate. You need to enter with a long term strategy, and you will always, I have seen in Dubai in 16 years that in 6 to 7 years you double your money.
Mhm.
I think it's the situation and the market is matured enough to the, at least to the brokers, that they now need to start learning. They now need to start understanding the numbers. You cannot just be pushy to sell. You will have to create a value. How do you answer, or what is your advice to first time investors in Dubai?
See, first time investor for Dubai, they are driven by a lot of reels. We are living in the world of Instagram. And a very huge number of returns is being talked about and even promised. So, first of all, I tell them that let us start from the scratch. And my first question to them is that why Dubai? Why do you want to buy Dubai?
Right.
Right? What is your goal? What is your goal of investment?
Right.
So, first, I need to understand that what are your goals? What are the outcomes you are expecting from Dubai? If they are driven completely by the reels, by those numbers, I clear them out that this is not what it is. This is what the number is. Right.
Makes sense.
So, first of all, the expectation has to be right. Then, as I told you earlier, that what is your cash flow? If your cash flow is supporting a 1 bedroom and we are looking at a 2 bedroom in Palm, there's a clear disconnect.
Right.
Right.
Correct.
So, setting the expectation is the most important thing. And then, of course, we start talking about projects, the timelines. Again, there's a person with very high intention of buying, but maybe he's not ready
Yeah, possible.
because of the cash flow. Mentally, he's ready, but by money wise, he's not ready. So, putting a lot of clarity into the buyer's mind is the first thing. Otherwise, you are wasting your time and he's wasting his time. We'll reach to the end point where you are supposed to be putting in a small token to the developer. And then you realize that this cash flow is not happening for me.
Right.
So this is something which is the first step I will do to put a lot of clarity in terms of objectives, expectations, and the way it has to be paid.
But maybe me as a advisor have this problem, but do you not fear of losing a client when he is coming to you and tell you that XYZ person has promised me 9%, but you are telling 5%, 6%? How do you clarify that doubt on the investor's mind? Because then technically you might lose a buyer or you may win a buyer, but do you have this fear of losing a buyer?
See, it's not about losing a client. It's about that if for the same, it's for the client to think that if for the same property, if I am saying that it will give you 7% return and a lower capital appreciation compared to somebody else who's telling you a bigger number and a much bigger capital appreciation, it's for him to understand, for the buyer or for the investor to understand that why from two people from the same industry for the same project are giving you such different numbers, right? I mean, if the rental on that day is going to be 8%, definitely you will get 8%,
True.
right? So I always believe in telling you a number and actual should be little higher than what I told you. That's where I feel that I did my job. Rather than I telling you 9%, 15%, and then you are getting a tad lower. Even if let's say I told you 15%, if you are getting 14.5, the guy doesn't trust you,
True.
right?
Again, it's a
But
one-time relation.
if you overachieved,
Yeah.
even if you told him 7 and you got 7.1, you'll be discussed in his living room along with his friends
True.
that this is what my broker gave me. And fear of losing a client is not a fear. It's better than the client losing his money and I losing my reputation.
It makes very much sense. But I'm sure when you give these numbers, you back it up with a lot of data.
Oh yes. So we show them the actual rentals. Of course, even sometimes the actual rentals may not be matching to your projected number because the area is upcoming. So let's say if something a villa in Dubai South or say anywhere else where the infrastructure is still coming up, the end user traction is still happening. Of course, there's a future to be seen, and that of course the investor has to understand that this is where the gap is. So even though upcoming development will have much higher rentals, it can be little sticky to convince the buyer. But that's for him to get a vision of Dubai and of that location. But for established location, it is very easy. I don't need to bluff or I don't need to explain the number. He can go and check himself, or even I can show him a couple of examples that this is the new building, this is the old building in the same location. What is the price difference in the terms of rentals, in terms of price? And then it becomes a very easy decision for the client.
It makes sense. This brings me to my next question. And I also want to understand if it is true or if it is a myth. When I go to a lot of network places, I've always asked, villa gives better returns than apartments. Some agree that apartments give better returns, but most common thought is that villas or townhouses always perform better than apartments. Is it true? Is it work? Does this work in all areas? What's your thought?
To a very large extent, I would agree with whatever you have heard. Indeed, the townhouses and the villas tend to give a better return because their service charges are low,
Right.
and you get a piece of land to yourself. Not that with the town with the apartment, not that you do not get a piece of land. It's more of a virtual land because Dubai sells land based on the built-up area.
So you get a share of the land.
Exactly. So it's not entirely correct that only townhouses give you a piece of land. Yes, that's the tangible land which you can
Right.
stand on, but understanding how land is being sold in Dubai, even an apartment has land.
Yeah. So you are part of a joint owner shared
Exactly.
association kind of.
Exactly. But yeah, coming back to your question, yes, if your budget supports and if you want that kind of a lifestyle, of course, townhouses and villas is something which should be bought. And in fact, from my understanding, when I talk to a lot of my friends, typically in Dubai, it's just a small insight that after the age of 40, 45, I've seen Families
Mm.
tend to move or say gravitate towards the townhouses and their own setups.
But how do you handle this 1600 plot, 2200 built up, four-bedroom townhouse? Do we or will we have enough customers for this, or is Dubai moving towards smaller housing? Because I see or most of the developers are now building smaller sizes townhouses. Is it what we are looking as of Dubai's future?
So it's a very difficult question for me as well to understand what's going on there. The thing is that because investors want a lower size ticket, they the market is feeding them with smaller, cheaper townhouses. Yes, it can work over a period of time, but that defies the whole requirement of the townhouse itself, the size.
Right.
So fundamentally, I'm not with it. But yes, if somebody has a very particular requirement of having a small backyard where he can do his own plantation, the dog can play, yeah, then
Um,
it serves. But most of the time, I see that these smaller townhouses these days, their backyards are as good as a large terrace in your apartment.
mm. So probably those who are living in a two-bedroom apartment would probably choose something like this. Probably, but we come to know as we go in the future in the market.
Yes, so that smaller size townhouse segment is still developing. Like if you go to uh, Australia, New Zealand, that's a very prevalent thing. So earlier, before I went there, I also shared the same thought process. Just what you
Mm.
told me, that smaller ones, does it make sense? But once I started going to those countries, and then I realized that yes, there's a market for it.
Uh,
People are living in it.
Similar to how Mumbai is probably.
So overall, yes, the individual units, smaller size ones, very narrow, smaller backyards, they are working. But then again, the city's dynamics there and in Dubai is very different. Over
Mm.
there, they don't have many high rises. Over here, you have high rises. But yeah, as an investor, I'll be little careful to go into a very small townhouse because maybe the rentals might not justify then later on. And
Okay.
the coming back to your question of townhouses versus villas and apartments, one thing every investor should be careful about is that the apartments are very well maintained because you are paying regular service charges
All right.
and a professional body is maintaining your apartment. Hear this properly, because in the long run, we are the people, as a buyer, you start cutting corners to maintain your own townhouse or villa, and then the cost bomb explodes on you after a very long period of time,
Right.
maybe after 7 years, 8 years. So whatever the lower cost of maintenance you see today, it can get even out over a longer period of time.
Yeah, actually makes sense. I mean, apartment buildings in Dubai, which are probably 20, 25 years old, are also still maintaining amazing qualities.
Yes,
Whereas, a lot of townhouse communities are now coming into revamp and
exactly.
major maintenance issues. Well, absolutely makes sense. So it's in a long term game, I would say that it's equivalent. What suits your budget should be your decision should be based on that. Is
Exactly, yeah. I
probably
mean, if you cannot afford a townhouse, but you still believe in investing in real estate in Dubai, rather have something smaller,
okay.
right? The
Yeah,
whole idea
makes
is
sense.
where your conviction lies.
Yeah. Start from somewhere.
Yes.
Okay.
So, Rahul, one question that I have is that now in Dubai, I think we have more than some like 850, 800 developers,
No,
right?
much more.
Small, big, upcoming. How do I trust a particular developer? Because I see so many new names and they are very well advertised with good product. But how do I really trust somebody?
So I think more than trust, you need to know what the process is to become a developer. What is the process to launch a project? So Dubai has very clear rules. For a developer to launch a project, step one is the land has to be fully paid. If the land is not fully paid, a developer cannot launch a project. The project has to be registered. The project needs to have an escrow account. So some red flags you need to notice is developers sign investor agreement that I'll give you 20% discount, 50% discount, 30% discount if you pay me 60% in advance, 100% in advance, is a very clear red flag. If a developer is taking a cash in advance, which is most likely not in escrow, without a SPA or an investment agreement, means the developer is building with your money. It's a red flag. Now, talking of small, large, medium sized developers, I think developers, even small, doesn't matter if they are following all the rules. And if you're getting a 30/70 payment plan, for example, and if all the 30% is paid in escrow, it doesn't matter because the cost of construction will surely be more than 30% in most of the cases. So, whatever you are paying to the developer is actually going into construction. So 70% of what you will pay on handover is when the project is ready. So developer technically is making his money at the time of handover. Even if the payment plan is 50/50 for the matter. Let me explain in numbers. I think today cost of construction in Dubai is approximately 700 dirhams per square feet on a building. I am telling an average. If it's a very good quality, maybe 900, medium quality 700, and normal quality maybe 550, 600. But let's say put it in an average of 700 dirham per square feet. Let's say you're selling a project which is worth 1400 dirhams a square feet, and if there is a 50/50 payment plan, and this 50 is also not paying upfront, you're paying over a period of 2 years, 3 years,
Right.
and every bit of the money is going into escrow, then it answers your question. 700 dirhams to build, 700 dirhams you're paying in escrow, the plot is fully paid. So technically developer profit and developer's investment on the plot is going to come only after he delivers the project. This doesn't mean you don't look at the reputation of the developer. Obviously, you need to make sure that developer has done some work earlier, either in UAE or somewhere in the world. There are a lot of developers from India coming and now establishing in Dubai, but they have a lot of exposure in India. They have built a lot of projects in India. There are developers coming from Europe, from Turkey, from all over the world. If there is a pre-history of developer and if they understand how the business of development works, I think you can and you should trust the developer. But if a developer is taking money outside escrow, if a developer is asking money outside escrow, if you see any red flag, even as per RERA, who is our governing authority, we are not allowed to sell if there is no project registration number, if there is no escrow account, if the money is going outside escrow account. I think to keep it in a very simple way, if any developer is taking 50% during construction, even if it's a small developer, and if everything is going in escrow, and if you see a history of the developer locally or internationally, you are safe to invest. Because a lot of times what happens is, let's say my budget is 500, 600,000, but obviously Imar or Damak or the top developers of the city don't build in those ranges. So where do you go? If you can't trust small developers and big developers are not building and you don't have a starting point, then you are stuck in the game. So you need to go and understand and look at the project. And there are developers who are giving you 20/80 payment plan.
Yeah.
And there are developers who are giving you 5 years, 7 years post handover payment plan. So when a developer is risking all his profit towards the end or after completion of the project, the developer can be trusted. Obviously, the quality, you may not understand the quality, but then that you will come to know only by looking at the past projects done. But if any developer who is following the rules and regulations, and you as a consultant are aware of what are the rules and regulations, your money is safe. Project delays may happen, will happen, but at least your money is utilized only for construction. No developer is pocketing the money and going away from the city. It's very strict.
100%.
Yeah.
Yeah. So I would say the checklist is that first you should check whether the project is registered.
Yes.
And if it is registered, definitely it should have a escrow.
Yeah. So without escrow, the project cannot be registered. If there is a project registration number, the escrow is already linked. And also, all of this information is available easily online.
On the DLD website.
You just go on the DLD website, go on the REST app, and look at project status tracking. You get to know all the information: the developer, the escrow, when will it start, when will it end. Even every report, inspection report, is uploaded on the website. So it's very easy. It's very transparent.
Exactly. So this is actually even, let's say, when I travel a lot, and the client asks me something very special thing you have pointed out, that the client asks me, how do I know that I'm paying to the right bank account? So what I did was I write in front of them right then on the projector. I'll open the DLD status website and tell them that this is the government website. I punch in a couple of project names to show them what's going on there, and then finally for the project that they are looking to buy, and I tell them this is the account number. Even if I tell you to transfer any money to other than this account number, you should go and check if the account number has changed on this particular website. Otherwise, you don't even have to pay. And you can report me to my office or to anybody else if I'm asking to pay to any other account number. Of course, a little exception to that is this initial blocking fee,
Yeah.
which goes to the corporate.
See, as long as the amount is very small, maybe sometimes
Maybe a
developers ask
percent.
$10,000,
Yeah.
$15,000 just to book the unit, so you know you have enough time to do the rest of the process.
Right.
A very small amount still makes sense, but let's say if a developer is asking you to pay all the down payment in a non-escrow account, this might be red flag in most of the cases. Okay, large developers obviously are different scenarios, but again, even large developers have escrow account on the day they are launching the project. So why pay into the developer account when you know escrow is already existing?
Yeah.
So again, it is just about we as consultants knowing what is right. The developers are good. The developers are following government regulations. They can't launch a project until they have met certain guidelines. It is about the consultants that needs to know what to sell and what not to sell. Kudos to the government here that everything is transparent. You get to see the transactions, you get to see the escrow details, you get to see the project construction status, you get to see everything that you want on literally anywhere in the world. All you need is access to internet.
Yep. And that's a piece of advice to my fellow consultants and agents, that uh, please do not suggest to a client to pay to a non-escrow account. That can come back on you and it can become your liability. So never do that.
Absolutely, absolutely. You need to know what you are doing.
Yeah. And I also believe that in addition to all these checks and trust and the process of Dubai government, I also believe that there is a system where they say that the developer also needs to put in some 20% security deposit into the escrow account,
so
in the
the-
same escrow account.
Yeah, absolutely. There are two options. Either developer constructs 20% and then starts selling, or put 20% in the escrow account, which can be used only for the construction of the project. So again, as I said, the rules and regulations are very straightforward, very clearly mentioned on what should a developer do before he launches the project. As consultants, it's our job to explain to our clients that a developer has already met 1, 2, 3, 4, 5. Only then he is able to launch the project. So at most of the scenarios and cases, the buyers are very highly protected by the government. It is just that certain delays may happen. It can be any reason. Sometimes materials not available. Delay in handover may happen, but you are covered because you have not paid 100%. You've only paid 30, 50, 60. So you are always covered in terms of your risk.
Got it. So yeah, so overall, I would say the first thing is the escrow account, and that's the most important thing when you start selling or if you are considering to buy a apartment or townhouse, whatever.
That's the key. That's from me and Rohit. We had an amazing discussion today. I think we've answered a few questions. And if you guys have any questions in your mind, if you want to reach out to us, we are always available to help you, to answer your questions, and to guide you to the right way of investing in Dubai. Rohit, your thoughts?
Same here. I share the same sentiment, and it was a good discussion, Rahul. I think we discussed some very, very pertinent issues of the industry and the doubts that the buyers might have in their minds. Buy from anywhere, but be careful.
Absolutely. We are not here to sell, we are here to guide, we are here to consult you, and we are here to build your portfolio. Signing off, Rohit and Rahul with you.
Thank you.